So you must be very happy with the new system coming up, one expiry a month.
This financial year return for us by trading expiry alone was actually negative 3.5%. Option selling on an intraday expiry basis, right, is turning more into a gambling than a game of skill.
Now you will have to almost wait for the whole month, your whole option chain reading, your whole support resistance, and plus your waiting period increases, and all these everything gets changed.
Now the alternative, which definitely everybody who trades Bank Nifty would look at, is
So do you mean to say that Sensex options will become much more popular rather than Nifty, and Nifty will slow down? Namaste, friends. I'm Jyoti Budia, and today at Upsurge Club, we have one a master blaster who is having a decades experience in options writing. He tried every way, buying everything, but finally he succeeded in writing. His name is Mr. Saketh Ramakrishnan. And I'm very happy to always talk to youngsters because they come up with lot many ideas, lot many innovations. We could not do the same thing in 4 decades, which youngsters do just in 2 years, 3 years. And I'm very happy to discuss with them because they design their system in such a way that all type of market conditions are included. It took lot of times and years and decades for us to understand the market, but young generation, they understand the market quickly. Yes, it is a good thing as also, as well as it can be a disaster also, but it depends how you take the markets and how much passion you have in learning and designing your system, and after that following your system, which is the most important thing. So welcome, Mr. Saket. Nice to see you at upsurge.club.
Yeah, thank
Namaste
you
very
so much,
much.
ma'am. Like, first of all, I would like to thank you a lot for having giving me that such wonderful introduction. And also, it's a great pleasure on my behalf to sit with you, like having so much experience. And I think it is going to be a fantastic conversation because I will have a lot to learn from this podcast, actually.
Even I will have a lot to learn because I someone told me during my ring times that be ahead of time so time will throw you away. So whenever I meet a youngster, I prefer to learn from him so I'm updated with the knowledge.
Right, ma'am. So it's a great opportunity for us as well because on the other hand, it's like you have so much experience. Like what we are seeing maybe from a decade is absolutely nothing. So you have 3, 4 decades of experience which you can throw some light on how things changed, how things have evolved, and how you have been so easily adapting to all the changes. And that is a fantastic thing which we will also get to learn through.
Sure. So let us start and tell us something about us.
So basically, ma'am, so numbers was something which I always liked. So I like my favorite subject was math, and the thing is, like my father is a chartered accountant, and the thing is. From the beginning, since I was very fond of numbers, everybody in my house was like, "Okay, you also become a CA." That was the idea. The thing is, I didn't know commerce. In commerce, there was finance as a separate field, and there was portfolio management, investing, and all of that. So this I only realized sometime during when I was in 7th 8th grade. So when I was watching my father regularly invest, right, so he was watching ET Now, CNBC, and I used to see all these tickers go down the channel, right. So then through him I was actually introduced to the world of markets. So he was not into trading, but somehow in urge of making quick money, I got myself into intraday trading, swing trading. I slowly started exploring all of that. Then I did option buying. So from 2000, I almost got into markets in 2013. right? And from 13 to 17, the 17 mid, you might say, there was not a single quarter where I actually ended up making money. So even though I used hundreds of different strategies, learns hundred of different indicators, so I never actually ended up making money. So there was a consistent loss making period during this time. And then 17 was the time when I actually also started reading Varsity. That was actually a game changer for me, at least, because from that I actually got to know how options work. So till then I had no idea how options work. So then even my father also told, like, what you're doing all this time is fine, but this is not something you can really grow or build, because you're not looking for long term consistency. You're just looking to do something, get something. This is not going to work. So all this while you did for fun, but this is not something you can go for. So then I slowly shifted to selling. So first, the most important thing is to change the mindset from buyer to sellers, like get to okay with the lower consistent returns than higher fluctuating return. It never used to give you thrill, but so those things what you have in buying, when you come to selling, things totally change. But once you get comfortable with it, so back then we had leverage, so even with smaller capital we could go huge lots. So once you got comfortable with it, it sort of became a habit. Now you can't go back to buying even if
Tell me about your strategy.
okay.
How do you take a trade? What points do you see while taking a trade? Uh, Selling options, buying options, because I know you are only from the world of options.
Right.
So what are the points you look? Do you look at charts? Because I don't think so you look at charts
Yeah,
much.
so broadly we work on three, four aspects, ma'am. One is the overall sentiment in the market, and second one, for the purpose of seeing okay where to cut the position or where we can add some extra calls or puts, we do mark important support and resistance levels, right? So first, broadly we start with the step one of identifying what range the market can trade in between. So where the market is expected to trade for the next 3 4 days. So then we end up creating a straddle or a strangle depending on the range. So then, based on how the market is moving, how sentiments are changing, whether market is taking out some important support or resistance, we decide whether to add some puts or cut some calls or add some calls. So all the second part is dependent on how the market.
So now whatever you have told me, I want each and every step. If you can explain in detail, so our viewers will be very happy to know what sentiments do you look? Do you see some FII data, or do you see some global markets, or you do some study on option chain or that type of some sentiments? And then how do you mark your support and resistance based on option chain or based on technicals?
Okay.
And finally, how do you take a trade and how do you modify your trade?
Okay. Speaking of current context only, ma'am,
Yeah.
right? So I'll take the market as of today itself. So Nifty for a long time is consolidating around 25,000. So 24,809. So the thing is here, ma'am, so broadly, just let's keep all the data points aside. So broadly, there has been a strong selling, but previously we have seen that whenever there is such strong selling, the recovery has been immediate and quick. But this time the selling is so harsh by FIS that the recovery is not being able to come at the same pace, right? So, and also the second thing to note is the DIS, looking at the SIP money flow, how they are buying, you know that any dip towards 24,000, which also happens to be a good support on the technical chart, so DIS will be on their foot to buy stocks from there. So broadly, in my opinion, on the upside, because the market has come down with such sharp selling, and so there is also a short term resistance around 25,200, 25,300, and on the downside 24,000 will definitely act as a good support. So I would look to trade maybe slightly month end options or next month options with 24,000, 26,000 short strangle. So that would be my first trade initiation. Or it can be, if the premiums are good, it can be a 25,000 short straddle depending on how much premiums they are pricing in. So this would be my first entry. So now from there I would look charts at a even shorter period of time. So as we discussed, market is taking support at 24,700 and 25,300 it's facing a resistance. So I will not be doing any kind of adjustments or touching my position till one of these actually starts to get taken out. So either it should start taking out on the upside or downside. So once they take out, so again, it's dependent on multiple factors whether I'm going to roll over my calls upside or add some more put options on the downside. So what exactly I'm going to do from this point is dependent on how quickly the market is trying to recover or how strong the buying is. So are FIIs again selling at the same pace, or like multiple factors come into picture whether I want to add on to the positions or cut my position. So this is broadly
In this, there are two questions from me. One thing, my viewers, they always are confused about the FII data. See, FII data or DI data is of yesterday.
Yes.
Or past few days. Based on that, how can you take a judgment for next trading day? Friends, इस वीडियो से आप ऑप्शंस ट्रेडिंग तो करना सीख ही लोगे, बट एक कंसिस्टेंट और प्रॉफिटेबल ऑप्शंस ट्रेडर बनना इतना आसान भी नहीं है. पहले तो आपके फंडामेंटल स्ट्रांग होने चाहिए, और ऑप्शन से रिलेटेड सारे इंपॉर्टेंट कॉन्सेप्ट्स मैंने upsurge.club के ऑप्शंस ट्रेडिंग फॉर बिगनर्स कोर्स में कवर किया है. आज ही एनरोल कीजिए. चलो अब वीडियो में वापस चलते हैं.
Okay, it is not about the judgment for the next trading day. It's about mostly the prevailing sentiments in the market. So, for example, that cannot be purely the base.
Yeah.
It can be one of the
because that is gone.
Yeah.
Tomorrow everything might change, no?
Absolutely, ma'am. So, but the thing is, generally, I will tell you how, like, at least based on my observation. So, when the numbers are pretty strong, let's say they're selling 5,000, 6,000 crores. So, very unlikely that next day they will end up buying. So, it has almost, like, at least in the past, never happened that maybe where they have sold 6,000, 7,000 crores over the course of 2-3 days, and next day they have become net buyers. So, it's also an eventual trend where they reduce their selling and then they go to net buying, and then again they reduce their buying and go to net selling. That's how generally the trend has been. So it can be one of the key points that, or you can also on the other hand see how much DII is or other hand buying, right? So it can be one of the points where you can see, okay, what kind of moves that you can expect in the market. So when I say what kind of moves, so maybe if you go down 2-3 months, right? So FII selling was not aggressive. They were selling 1,000, 2,000 crores every day, but DIS were buying 3,000, 4,000 crores, and the market every single dip just used to, like, it was just buy on dips, like it just used to go up. Right? So now the thing is, it is not this thing. It's now next day when you're going into the market, you can be wrong, but there is a higher probability chance that, okay, FIS are not selling aggressively over the past few days. Whenever there might be a dip, DIS might end up buying. So it is easier to stay on the long side. You will get, one day you will get hit, but it gives you a higher probability to ride the move, something like that.
So basically, you analyze the data of FII.
Mostly brought sentiments of the market. FII is only one factor, not the main factor.
Yes, because why I'm saying, people keep on asking me, students also keep on asking me, FII data they see, but SIP money is pouring in. DIs are buyers, FIIs are sellers. Very rarely both are sellers. So almost the position becomes equalized. Then overall sentiment, how you calculate it?
Okay, see, the thing is, ma'am, okay, now if somebody is selling for say 6,000, 7,000 crores and somebody is buying for, so when the numbers are minimal, like let's say 1,000 crores, 2,000 crores. So what generally happens is when the selling is also aggressive, so the market does not usually give a trending move. Like when buying is aggressive, selling is aggressive, market, like it, in the sense that you might not expect a huge upside, but generally when the selling is very aggressive, there might be a slight bit of downside. So market in such cases, what happens is now this period, because there has been such aggressive selling, can be followed on with a longer term of consolidation before it settles down and again one side starts buying. So nothing is certain. It's just a game of probability. So now DI is also buying, FIs are selling. So when the numbers are lower, it just markets are more stable. Let's say like they were selling for 1,500 crores, they were buying for 2,000, 3,000 crores. So we saw a steady up move in the market. There was constant, consistent buying, which was more than selling, and the numbers were also not very up and down. So this is again like not the main factor at all, as I'm repeating it again. This can be one of the factors with some amount of it can throw some amount of light on the volatility that is preceding the market, and it can throw some light on, okay, how aggressive the buying is, how aggressive the selling is by the market.
So that way you analyze the FII data and DI data.
Ma'am, I don't give so much like, as I'm again telling, this is just a small fact.
Just a glance at it.
Yeah, one of the factors, but not the main factor at all. So this I don't base my trade on FII DII data. I just use it as a supplementary this thing.
That's
Yeah.
good. And you told that I will see whether market sustains below 24,800
Yeah.
and or it goes towards 24,000 as a support. So how do you see that in option chain, that market will break 24,800 and move towards 28,400, or it may reverse from there? How do you see that in option chain, or you use charts for that?
Yeah, so before I used to like heavily rely on open interest. So earlier, if you go prior to 2020, 22, it used to, like, especially 21, 22, or prior to that. So you could simply sell wherever there is highest open interest, and you can just sit back, relax, and the option used to go down to zero. But today, the thing is, I have started relying more than open interest, more on technicals, like technicals of simple support and resistance. So the thing is, if important support or resistance is broken, so there's a higher chance that the market can trend towards a particular direction. So, and open interest is very now a lot of open interest also gets created with the intraday position build up, where
Yeah.
they create straddles, put a stop loss, high open O is created, then the spike comes, open interest suddenly changes within a matter of a few minutes, like.
Yes.
So at least for my positional trade, I am basing most of this thing on technicals, because if you go for month end options and all of that, right, so the amount of OI which would have been created is also very low. So it would be very low across all the strikes, and generally mostly people trade on round strikes when you go for month end, 25,000, 24,500. So here what happens is, naturally 24,800, 700 won't have OI, because people are not trading that strike. So it might also not give it so when you're trading with month end, it might not give the exact picture, because nobody is trading 24,300. People will be actively trading 24,000, 25,000. So it won't give you the actual picture at the mid points where there is no trading activity happening in month end.
Yes, because if you have a difference of 500 points, that's
Yeah.
a huge difference of approximately 2%.
2%. Exactly, ma'am.
And in Nifty, 2% is a very big deal.
Absolutely.
So how you handle that?
So there are multiple factors which add in, ma'am. So one is the market sentiments. So market sentiments can be of multiple things. One, like, the general trend now is markets. So on the longer end, market is bullish, but in the short term, we are witnessing some selling pressure. So this is something which you can analyze maybe by looking at the market. So you don't have to really look into any data. So short term, we are coming down. Longer term, the trend still looks positive. So what you would want to most likely do is try to identify call the bottoms, and try to see where you can go along, or where you can find the good support. So if this is one of the factor, the other factor can be simple technicals. The third factor can be like, again, one of the factors can be FII data. One of the factors can be open interest. So basically what we are trying to build here is, using multiple factors, you are trying to make some sense out of the market. So this, what you're trying to make, might give you a probability of say 55%. 45% you're going to get it wrong. So you're going to get maybe you are going to call the market right 55% of the times. So the key comes here in how you manage your risk to reward. So if I am, so it's more a game of statistics than any of the trend analysis, anything of that. It's purely a number game of statistics. So I have a track record. If you see over the course of last 3-4 years, I have only timed the market right 56% of the times. That is all I have gotten it right. But what has actually helped me make money is my risk to reward. So when I lose, so usually my risk to reward is 0.9, and my risk is 0.9, reward is 1. So if I'm making 100 rupees on a right day, I usually end up losing 90 rupees on my loss making day. So this, even though the difference is very small, here I have a edge of say 5-6%, here I have a edge of 0.1%. So over time, when you keep adding that up, so it only it helps you make a profit.
You just said about spike, and even I have seen the spikes regularly. It has become a frequent affair. And today, when we are interviewing, it is 18th of October 2024. So, just a few days back, say 4-5 days back, I had seen Bank Nifty moving up by 700-800 points, and within 5 minutes, it's back to where it was.
Right.
So, how do you handle such type of situations?
Ma'am, to be honest, so option selling on an intraday expiry basis, right, is turning more into a gambling than a game of skill. Because I will tell you, so when the spike comes and it comes down at the same time, even if the market comes back at the same place, if you have sold a put option also in the up move and in the down move, your put option would have hit the stop loss.
Yeah.
Right. So because of the IV spike. So the thing is, it's more at least for a seller, right? So we are also slowly trying to move away from expiry. Like we have already done it. The thing is, we somewhere felt. So the thing is, our this, if starting from April, this financial year return for us by trading expiry alone was actually negative 3.5%. So many times what used to happen is, even though we were having very good days where we used to we made a profit, so these 1-2 spikes used to take away most of it or put us back into loss. So the thing is, what we understood is again, as you said, maybe it's important to change with the time, right? So see, earlier it was a game of skill. Like you could manage the position, you could without placing a stop loss, you could trade, you can cut it manually, you could manage multiple things could have been done, right? Today you don't have scope for that, because the time to react is absolutely nil. Immediately it is coming, and playing without stop loss is almost suicide, right? So 5 rupee option going to 500 rupees, right? So now if you go back and introspect, right? So what exactly am I? So can I call these things out? Can I try to predict them? Can I try to analyze when exactly they are going to come? So are they total randomness, right? So when they come, so can I be in a position where I get a favorable risk to reward? So multiple questions when you ask, and you see that overall end of the day, you are not seeing a positive expectancy out of the outcome. Okay, so I am not able to call when the spikes are going to come. I am not able to call the magnitude of what the spike is going to come. I can't, because many times it might happen if I even try doing ratios, the OTMs can spike much more. Sometimes when I buy a hedge, so if I buy too close a hedge, so then there is no point, because the net credit I'm going to get is very low. If I buy too far a hedge, it might not react the same way as. So when you take these multiple factors into consideration and put it in line, you see that can you manage a position in a better way? Because when market is going up, both call and put are hitting the stop loss. So many randomness which nothing can be predicted, and you feel that there is no way to manage it. So what you're essentially doing now is basically gamble, because nothing is under your control, right? So you can't control your risk to reward, you can't control the probability. If you can't control anything, you're basically gambling, right? So even though the other part was gamble, here you could at least control few factors were under your control on when you want to cut, upon hitting this loss you want to cut. But now it has, like, when we started analyzing that and realizing, okay, so the things have changed. And if I am adamant saying that, okay, 6 years I have made money with expiry from 17 till 23, right? So I don't want to change. So market is going to make me forcefully change. So today I might be changing at 3.5%. If I am adamant to stick to this, when factors are in front of me, right? So can people make money? Yes, people are making money with spikes. So the question what we have to ask next is, am I good enough to make money in this market, or are there better ways or easier ways which can suit my mindset to make money in this market? So that's when we slowly started shifting from the last 2.5 months. So started reducing our exposure to expiries and started increasing our.
So you have stopped zero DT.
Yeah, mostly, ma'am. Like when we get some very good opportunities, we do take, but you can essentially say mostly we have stopped zero.
So you go to next week.
Yeah, weekly options and next week.
Or monthly.
What do you prefer? So basically, again, so when the IV spikes, like how it happened recently, so we are actually trading monthly, but otherwise we definitely love BankNifty weekly.
So even gamma blast also can be taken into account with this.
Which one, ma'am?
With the spikes and all, because gamma blast is spikes they may not be considered gamma blast. Yeah. They may have only one side when market moves up, and when market moves against you,
right,
one sided. That is where the gamma can blast on zero DT.
Right.
How that is also you are taking into account?
Yeah, gamma blast can be also something which can be managed, ma'am. But these volatile spikes which you get, right? So, so I will tell you what happens with a gamma blast. So as long as the market moves in a direction and doesn't, so if it's only purely gamma, so put side will actually come down. So while the call goes up and blast, put side will actually come down, because the gamma is only affecting the put. But when it comes with Vega, so it is pushing prices of both put and call on the upside. So here put is not decaying, but your call is just multiplying.
Yes.
So these are the dangerous.
That is what I'm saying. No, so in that way, how do you handle the gamma blast along with Vega blast?
So it's mostly through stop losses, right? So that was the only way to handle it. Like hedge is also one of the way, but so I have tried hedge trading. But I personally don't like a lot of hedge trading for multiple reasons, because one, I personally as a trader don't know, maybe I don't know how to manage, like there are great traders who do fantastic hedge based trading. So the second thing is with hedge based trading, at least for the kind of premiums I trade with, right, I feel I give up 30-40% of it, what I'm collecting, if I want to make a sensible hedge, like for the purpose of hedging. If I want to make it for the purpose of margin, I can still make a lot. But for the purpose of hedging, if I want to take a hedge, so I'll be giving most of it away in that. So mostly I try to control everything with stop losses.
So stop loss are in your system or in your
system,
mind?
System. all everything in system.
Not in mind.
Not in mind.
कि आएगा तब कर लेंगे.
No.
No?
Absolutely.
Why?
Because we are humans. There is like, no matter what you do, there is always some element of greed, some element of hope, some element of this thing kicks in. So sometimes when stop losses hit, I also force myself not to take a trade immediately. Just give time. Either let the market go somewhere, or you think fresh. Like when you immediately try to enter, you're entering with the sake of something running back of your mind. So yeah, that is one factor where everything is in system, nothing in.
So you must be very happy with the new system coming up, one expiry a month.
It won't, like, in the sense, for me, ma'am, like if when I have given up zero DTE, maybe if I was trading zero DTE, it would have made me sad. But since I am not trading, won't make me happy because it's not going to change anything for me.
So for you, nothing like even you have one settlement a month. What do you mean by it will not make you happy?
Ma'am, in the sense, things are not going to change, at least for if we are doing like weekly positional or monthly options. So, one sad part is definitely going to be there because Bank Nifty is going to go. That was the core index what we were trading. And removing weekly expiry on that is definitely because I am not a big fan of trading Nifty. So, definitely that is going to make me more on a sadder side itself. But on the other hand, let's say if I'm trading monthly options or if I'm trading weekly options, broadly apart from the fact that Bank Nifty is going out, right? So there is nothing which is going to affect me, like if I'm only trading weekly, the weekly options are still there, because I only used to trade Bank Nifty alone, but now I might have to shift to Sensex because they offer good premium. Nifty is not something which I would like. I don't like trading Nifty a lot. Multiple reasons, like
And Fin Nifty, Mid Cap Nifty.
that I never trade. Only Zero DTE I used to do, but I never saw them as a positional thing at all. Like,
So Bank Nifty though you
Hmm.
will have monthly. Otherwise, if you see weekly
uh,
expiry, weekly one or the other option are going to get expired.
right,
So you might have weekly, but in a different way. But one option is a monthly expiry.
correct.
So what do you prefer, more of index or stocks?
Index itself.
Only Bank Nifty.
I like as I told you till today the favorite is Bank Nifty, but the thing is how things are going to change post 20th of November is something like, in the sense, it's see, I am not very used to actively trading month end options. Like, even though we have small exposure, so it is very small. Like now, if I have to trade full time Bank Nifty, I have to only stick to month end. So can it be a good sustainable thing for long term? How does like different movements in the market affect that? Something yet to find out. But weekly we have traded a lot. So but that going away will definitely, we have to adapt to the system, maybe with trying Sensex or
Let me put up the question this way. Bank Nifty expiring once a month, whatever may be the date. Now, you will have to almost wait for the whole month.
correct,
Till now, you were doing weekly
correct,
expiries or something like that.
correct.
Now you have to wait for whole month. Waiting for whole month, your whole option chain reading, your whole support resistance, and plus your waiting period increases, and all these, everything gets changed. See, here I will share something with you. When I started my career, there was no index trading.
Hmm.
Index क्या होता था? We never knew only.
Hmm.
If there was BSE Sensex, but we didn't knew only what was BSE Sensex unless and until online came into the system. Till that we didn't knew that.
Okay.
We knew market गिर रहा है, market बढ़ रहा है. That's all. The thing was more on stocks. So that thing from I've seen from beginning. So I'm more in stocks. I'm comfortable with stocks even till date rather than indices because of the reason I
Huh.
started my career with stocks
Understood.
and I didn't knew about index at all.
Huh.
So and index trading was not there only.
Mhm.
Even after indices were there. There was no badla system in indices or anything. First time we saw the trading of indices in 2001.
Okay.
Till then, we were only into stock badla, which is the type of futures.
Mhm.
Uska old version was badla system, vyaj badla. No? So we were very much used to futures, but index trading
Mhm.
came in 2001. So I am still comfortable with stocks. And what you're talking about is totally indices, that to Bank Nifty.
Mhm.
So for we people to adapt Bank Nifty directly became a very, very difficult thing. Though now it is not that difficult, but initially I used to tell everyone that I don't trade Bank Nifty. Everyone used to say, why? Nahi hota. It's too difficult to... By the time I think the price changes. So it took me almost 15-20 years to come to Bank Nifty.
Okay.
That much time it took me to come to Bank Nifty. Nifty still I used to trade and I'm trading today. But Bank Nifty comparatively still my quantity is only 10% compared to Nifty.
Okay. Okay.
That is my position. Can't help it. because my mindset is not that way
Mhm.
to accept to such a big
Yeah,
risk.
right.
So when monthly will be coming and when you're writing options, you have to wait for the whole month for
Hmm.
the option to become zero. Then
Hmm.
that how you will work on it. How what have you thought on that term? Because these are constant changes will keep on happening maybe after every 1 year or 2 year. So anytime when the viewers will be seeing this video, they will also come to know somehow that how to adapt the changes in the market.
The thing is, ma'am, like one, as you said, like changing directly to monthly is not a easy task. But the best alternative, what you have is Sensex. Almost like even it is a high value index. The premiums with OTMs are generally higher, right? So even though it moves similar to Nifty, but just that it offers higher premiums, you have like ways to work around. So very simple, like what happens with difference between Nifty and Sensex is going to be, maybe if I'm going equidistant, say 1% away from each or 2% away from each, right? So let me tell on a expiry day rather than this thing. So maybe 1.5-2% away from each, Nifty might offer 2 rupees or 1 rupee, whereas Sensex will offer 15 rupees, 12 rupees, 15 rupees. So this difference in value of the option as a seller, because if I sell a 2 rupee option, it is not going to go down to 0 till the end. It is going to stay at 1.5 only. But a 12 rupee option can at least come down to 4. So that's why maybe like higher value indices are preferred. And now the alternative, which definitely everybody who trades Bank Nifty would look at, is Sensex, because it offers similar characteristic compared to this thing. Only issue is with the liquidity which Bank Nifty had and Sensex has. So with that, if lot of traders adapt and it gets sorted, I think it would be.
So do you mean to say that Sensex options will become much more popular rather than Nifty, and Nifty will slow down?
Nifty might not slow down, but in my opinion, Sensex will definitely become more popular. And to be honest, ever since this was announced, I am actually betting big on BSC in terms of equities also, because this is something which I can see. One myself as a trader, I will be adapting to it. I also see a lot of people around me also want to do the same thing. So when so many things are clearly visible, and I feel I should make use of the.
This was one of the new thing which I've learned, that after Bank Nifty, people are preferring Sensex. So I've learned something new, na? And that everyone also will get that knowledge. So these are few. See, every people whom I speak, maybe everything I may not learn from them, I may be knowing, but one line is more than enough for me to change my perspective.
Right, like in the sense, as I said, the key differentiating factor is the amount of premiums what you get, right? So like as a seller, when the pennies go down like very small, right? So let's say an equidistant option in Sensex, and let's say it's Sensex and Nifty. So if it's 50 in Sensex, it will be 10 in Nifty. So as a kind of, for me to sell and capture that this thing, right? So it feels more it at least feels, even though it might not be, it feels more natural to get capture the down move in.
One thing is disturbing me, be it Sensex or be
uh,
it Nifty. Lot size is as per the
Correct,
value.
absolutely.
So premium will also be as per the value.
Absolutely, yeah.
So if premium in percentage will also be as per value,
Absolutely.
we are looking at ROI.
Uh-huh.
That is return on
Huh.
what we have investment.
Huh.
We check out that this much
Huh.
earning we have made. So what is the difference that you're more comfortable with Sensex rather than Nifty?
Okay, just to give you, as I already mentioned, ma'am, let's say you, like on an expiry day itself, let's say you go equidistant in terms of percentage, right? So in Nifty, it will be available at 2 rupees, whereas the same equidistant percentage on a Sensex expiry will be available at 15 rupees,
Okay.
just because of the index value. It is not, it has nothing to do with the this thing, it's just
Okay.
purely because of the index value. So Bank Nifty will be available at 10 rupees or 12 rupees.
Okay.
So now if I have to sell 2 rupees as a seller, so it is not a very compelling thing for me, because this there is always a chance 2 rupee can go to 6 rupees. The other 2 rupees cannot go below 1 rupee.
See, this is something confusing to
Huh,
me. Why confusing to me? And I would like to have a small debate on that.
sure.
Uh, Generally, Sensex is approximately 3.5 or 3.3 compared
Correct.
to Nifty.
Correct.
So if that is 15, this may be 3.
Hmm.
If that will fall, let us say by 10 rupees. So this will also percentage wise fall, not to 50% or something like that.
Absolutely, ma'am.
And increase, if that increases by say 10 rupees, means it's almost like 60%, 70% that has increased. So this will also increase by 4. If you come to lot size and value amount, it will almost everything ROI per se though is everything same. Na?
Yes, ma'am. Nothing like you're absolutely right. That way, nothing changes. But maybe one simple thing when you actually open the option chain of Nifty even today. So one thing you can observe, beyond a point, no matter how far you go, an option will be, so maybe there will be a list of 20, 30 strikes trading between 2 rupee, 1 rupee, 2 rupee, 1 rupee. So it would be like in the option chain if you take a look at it. So beyond a point, an option which has already come down to 3 rupees or 2 rupees doesn't go to zero immediately. So for example, if I take a option at 10 rupees in like say Nifty, right, and it comes down to say 4 rupees, 5 rupees, right, and on the other hand the option will go to 15, 16 rupees. But same thing if I pick in Sensex, psychologically I feel the decay is happening. That, as I said, even though it might not make a lot of difference, as a trader you feel, okay, so here you have to go and play in terms of quantity, right? So you have to increase your quantity in Nifty. So in Sensex you can you will actually see the price moving in your favor. So this is what, like, when you're trading, it gives you a different kind of feeling, like
Okay, that means you're talking more on psychological
yes, yes,
part.
absolutely,
That here you can see 15 rupees, here you are seeing only 2 rupees. So that
absolutely,
15 and 2 is making the
yes,
difference.
yes,
From
yes.
that percentage wise, from 2 to 150,
Hmm.
50 paisa has fallen down.
Hmm.
But you're looking at 15 ka 12 and a half ho gaya. You're looking at 2.5 has fallen down.
Correct,
So when you see that numerical per se,
absolutely,
so that
absolutely.
is hitting the psychology.
Why it hits also, because, so for example, I will tell you the core reason why it hits. Here, for me to capture that 20%, I have to go huge quantity, like very high quantity, right? So because I am capturing 50 paisa. So for example, you can just take a look at it, ma'am. If something is at 15 rupees and it is coming down by say 5 rupees, 33% loss. So from 15 it is coming down to, sorry, 10 rupees, 33% loss. So I am capturing 5 rupees overall numerical 5 rupee value. Here 33% loss will be 60 paisa. So now you can actually see that I can go 10 times lesser even though index value is just 3.5 times more, right? I can go 10 times lesser the quantity for the same percentage dip. With 10 times lesser the quantity, I end up making the same money, even though the index value is just 3.5 times difference.
It's a big debatable topic to me.
Okay.
We will definitely have a debate
Sure,
on this. So
sure.
it's a very big, because it is a matter of psychology versus
Absolutely.
numerical factor.
Absolutely.
Like what I see with some participants and viewers of mine, and even students of mine, they say they buy the options, and अरे it's just 500 ही तो मिला है, 500 रुपए तो प्रॉफिट हुआ है. Other side they say and in loss side they keep on standing कि max loss is 10,000, profit में 500, oh it's only 500. But why not look at ROI? Because putting 10,000, making 5,000 out of that is difficult, but making 500 to 1,000 is not difficult out of that. And to make it 5,000, they are not happy with the 500,000 points, whatever they earn. So that is why they are ready to take the risk of 10,000. Now here I say, if you put 10,000, if you're making 500 to 1,000, it is just, if you see the ROI, it is somewhere around 5% to 10%. So look at the ROI, not the figure. But what happens is that mental figure,
No, ma'am. Actually, it's
numerical value, and ROI,
no, ma'am.
something
ROI
that
also changes. Let me just give you an example why it changes. Okay, let's assume to sell one lot of Sensex, you need 1 lakh. Okay, even though you're selling 10 quantity. And to sell one lot of Nifty, it's 3 times more. You need 1 lakh, assuming. So, like, let's keep 1 lakh 20, 1 lakh 20,000. So, you'll be selling 25 quantity, right? So, here, now let's say I have 1 crore capital. I sell 100 lots. So, 100 lots in Sensex would be 1,000 quantity of Sensex and 2,500 quantity of Nifty. So when, let's say, Nifty option is at 2 rupees, it comes down by 25%. So which means it half paisa it would have fallen. So half paisa into 2,500 is 1,250 rupees. Sensex, using the same capital, same number of lots. So what I will be doing is, let's say it is at 15 rupees, comes down by 25%. It is almost around 3.5-4 rupees. So 3.5 rupees on 1,000 is 3,500 versus 1,250.
okay.
So ROI wise also it will make a difference. Why? Because so whether you want to sell a 10 rupee option, 100 rupee option, or a 2 rupee option, you have to pay the same amount of margin. For a buyer, it is different. For a buyer, he has to pay margin based on the amount of cash he has to deploy. But a seller, to sell a 2 rupee option and a 100 rupee option, will pay the same margin by hand. So now he's going equidistant. Using the same margin, he's selling a higher premium option. So ROI is also, it makes one difference. Second difference, in terms of quantity, to make the same return, he has to add up the quantity here in Nifty, right? So like when I say quantity, so if I had to make let's say same 3,000 rupees, instead of making 1,250 rupees, I had to not sell 100 lots, I had to sell 300 lots,
Okay.
right? Because to make that 3,700 or 3,500 rupees. So now here, having so much open quantity will also put a psychological pressure. So both things add up. It's not just one thing.
So I've also got a new perspective, and now even I will start checking the difference between Sensex and Nifty. Till now, I was not doing. So this is the thing. No, we also learn something new and update ourselves. What younger generation is doing and how they are planning their further trades and how they want to implement that. What is the calculation going on that in their mind? So that also we learn, no?
But as you said, ma'am, like what you said is also absolutely right. In terms of end of the day, it's all in the head, right? But like when you're trading, your mind thinking in a particular way is all that matters. And when you start to feel something is risky, you start to feel something is easier, something is, so it makes a huge difference without even you realizing. So the way you trade, the way you handle that position, so the difference does exist. It can be very minimal, it can be minor, but the amount of the same thing it comes onto your mind is going to change drastically with the different, like when you actually change the like premiums what you trade.
What type of strategies you basically use? Short straddles, triangle, or iron flies, iron condos?
Mostly short straddles and strangles, ma'am.
So
Yeah,
it's open trades.
yeah, like nothing like very basic, like nothing extra, as simple as a simple short straddle or a short.
If market opens gap up or gap down.
Like that is part of how you end up
Because
managing later on.
nowadays it is a common factor of market opening uh, 200, 300, 150, 200 points bank nifty opening up or gap up or gap down. It's a very common factor. So accordingly, if I see Sensex or bank nifty, that also works around 3, 400, 500 points up or down. Then how you manage that one?
Ma'am, for a simple example, like when we entered a 25,000 short straddle,
Mm.
so the premiums were almost around 730 total put together. So currently they have seen a huge dip over the, because last 3-4 days the market is just consolidating. So
This was monthly or weekly?
month end.
Yeah, monthly. Okay.
So the thing is, so now even though there is a gap up and gap down, till the like levels of what I had earlier mentioned, 24,700, 25,300 or 250 is taken out. So I don't have to put a lot of focus. There might be 100-point gap up because I am covered for 700-point move, right? 750-point move. So now the thing is, now we have come to a stage where after the move, if I close the position also, I still end up in a profit because we have already seen good enough decay in the markets. So because we took the trade when the market fell violently and immediately there was a bounce back, so the IV was quite high. So now the IV has cooled, the premiums have reduced, so I might have to check today. I don't know how much exactly the premiums are, but it would have definitely come down below, in my opinion, 550, 500.
I've seen almost 1500, 1600 points in Bank Nifty, a single day move, upside or downside. How do you adjust your options?
Ma'am, one very wrong notion which people have is you have to firefight all the trades.
Yeah.
So the thing is, see, when important levels are getting broken out and you're seeing strong strength in any of the index, so there is absolutely no need to hold the other side. If the market is moving up, why do you want to, like, whether you have a 10 rupee call, 1,000-point away call, 2,000-point away call? So when important resistance gets taken out, why do you want to sit with a call? Add back the call when you see that, okay, market is trying to face some kind of resistance, it is trying to difficult to go back up, or it is trying to retest the support. When some like key factors like that is there, you can add back the call anytime. So you don't have to be in a position and keep on firefighting it. Now you see that, okay, maybe the like yesterday, day before yesterday, resistance is broken broadly. There might be like resistance for Nifty maybe around, say, 26,000, which was the previous high, or 24,000 can be a support, and you have gone and taken a trade much beyond that. So now you can wait for the market to come till there, see how it is. So while the market actually starts coming down, so because there is a shorter term resistance at 25,300, you can start adding 25,500 calls, 25,300 calls, and when it comes towards 24,000, see how the market is reacting. So you don't have to cut your puts immediately. If it is bouncing back, well and good. If it is not, you can then see how you want to adjust. So multiple ways, but end of the day, you don't have to fight all the fire. And also, booking loss is not a bad thing. As I said, I only get 55% of my trades, meaning 45% of my trades actually go under a loss. So only difference can be made when you get it right, how much you make, and when you get it wrong, how much you.
Okay. So you take into consideration all these PCR and everything?
At a point I used to, but currently, no, ma'am. Like currently, not a
Any
lot.
reason?
So, like post the activity picked up, I have usually off late I started relying less on open interest because of all these spikes. See, open interest mostly, generally in my opinion, as you go closer to expiry, as the activity in the option starts picking up, so you get a realistic picture. So today, me seeing month end expiry might not give me a realistic view at all of the market with the PCR or whatever it is. So the thing is, now we know that on an intraday basis, or as we approach close to expiry also, there are a lot of spikes coming in. So it creates kind of a delusional picture, in my opinion. I might be absolutely wrong. So I had also made a lot of videos on open interest in 21 to 22 and all, quite a lot. But today, with times, I have, like 2 years later, I have also stopped fully relying on open interest as one of the key factors.
Then what do you use?
Multiple things, as I said in the beginning, ma'am. Like
Uh,
it's not just
Charts
one
also.
yeah, yeah, everything. Like it's not one thing, like mixture of multiple things, just to get a sense of where the market is going, and then I try to take the call.
So do you look to the change in open interest, or what makes you feel that the support is getting broken? So directly you take that call from technical analysis, or you mix it with the option chain to understand whether the support is severely broken or it's just a trap?
Okay, Steve, like in the sense, I am not very
Because why I'm asking you this question, as you said that you don't rely much on open interest because it can be a trap. And that's what I'm asking you. If you're using technicals, along with that, if you're using option chain, can you find out whether it is a trap, or whether it will be severely broken, or severe the resistance may take out and there can be a blast, something like that? Can you find it out from the charts along with option chain,
Ma'am,
open
in my
interest?
opinion, at least I can't do that, to be honest. So I don't know if it will be severely broken or it will bounce back from there, or is it a fake breakout. I can't call those things out. But what I do is, like, I manage the position in a way where, unless I get a confirmation, I don't fully cut a leg, or like, let's say, till I get a strong confirmation that important support is broken, I don't have to cut my put leg. I can simply add some extra calls. If it turns out to be a fake breakout, market starts coming back, then no issues. So, like then there will be no issue. The thing is, if I only hold my put leg, sorry, if I cut my put leg and only hold my call leg, and later market starts coming back up, then it is going to be a problem. So see, end of the day, ma'am, like, you make a view, and open interest, or multiple factors for that matter, is just to see that if all of them are collectively helping you support the view. Like, for example, you are thinking 25 300 is a good resistance. So are there high open call side open interest at 25 200, 25 100, 300? So then you are psychologically okay. There's so much open interest is also there. Technically also it's a resistance. It gives you kind of confidence to hold on to the position. Apart from that, whether it is a clear breakout, reversal, or a fake breakout, I don't usually try to call them, like, in the sense, try to time the this thing.
Can you tell me which is the trade which gave you the maximum return and the maximum loss, or something? Till what level of loss you hold?
Generally, my trades are quite boring trades, ma'am. Like, to be honest, huh,
Writers trades are always
huh,
boring trades. That has to be. It is like getting a rental income at the
yeah,
end of the month,
yeah.
right? So you have to wait for 30 days to get that income, right? It's agreed. I agree to that. That it is a boring. If you are not trading in a boring way, and if you are aggressive, then option writing is not for
Yeah.
you.
So my best days are generally have been during the event days of budget or election, where like, we have made around 5%, 4%.
How come you?
Because of the high IV, basically.
Okay.
Right, high IVs are very high, and post 12 o'clock, usually market picks a trend, like, when, like, at least on the election day, what we have observed. For not the current election we did make money, not so much, but the previous 2019 election, like, after one up move, there was a continuous same thing had repeated in 14 also. So first half, during this thing, there was an up move, second half complete sell. So and
This year was totally a different thing.
this year was totally different. Like, but best of our money has come from budget and election days, where 4 5%. But highest loss has been during 2019. That is during Nirmala Candle time. Right. So that was one where we had.
What is this candle? Can you please explain to our viewers?
So I think this happened on 21st of 2019, 21st September 2019, if I remember the day right. So the our finance minister came and announced that the corporate tax rate is going to get cut, right? So the thing is, as soon as the announcement was made, intraday we didn't get hit. So intraday, the thing is, the market started to go up. We cut all the positions, but next day, the thing is, we didn't expect the same quantum of move to continue following also. Next day, bang. So we carried some positions thinking that our market has already gone up too much, it might consolidate or something. So we carried a position, uh, which was mostly a range bound position. Next day, we opened with 3.5 4% gap up in Bank Nifty. I think it was around 31 or 32,000, if I get it right. It was a gap up of 4. So position started bleeding from the morning. So now, being totally unaware about the situation, how markets can move, getting scared, we just cut the call. And then the market immediately after the open started to come down, crash down heavily the very next day. Again, in the second half, it bounced, but when that crash came, there also we were pretty high on quantity. We hadn't sized our position right. So there we lost a lot. So I think we lost around 13% or something. And second one was during COVID crash, where we had never seen market hit a lower circuit. There also we were quite adamant, and there that was one of our biggest loss, 23-24%. But after that, after COVID specifically, there has not been a single day where we have lost more than 3%. Like that is the last where we have gone to a double digit loss.
Oh,
Not even double digit, more than 5% we haven't.
so sometimes when you also become adamant,
Huh.
you lose money.
Absolutely.
So that is where then that time your stop losses are not there in the system.
Stop losses. Second day, like as I told you, in Nirmala Candle time, like so it was a positional trade. So there was no stop loss. In COVID time, it was BankNifty. If I remember right, it is March 12th, 2020. If I get the date right, it was a Thursday expiry in BankNifty. Right. So BankNifty that day had fallen 13% from this thing, but I did never expected markets can even go below 10%. Right. So that day, like we could have kept the stop loss, but I was very adamant that okay, market won't break 24,000. Like BankNifty won't break 24,000. I had shorted aggressive 24,000 puts. Market was at 26,500 or something. From there, it came straight down to 23,500. After one point, because I had not kept the stop loss, so option which I had shorted at 40-50 rupees because of high premiums was now trading at 300-400. And when it became so much, I was unable to willingly accept the loss. I have actually let it bleed so much, but finally I was forcefully mated.
Because IVs had also shot up to
Yeah,
135.
yeah,
Yeah, at that time.
absolutely.
So how do you handle that situation? Or like other common traders, you were also looking at your loss this way. Arey, ja raha hai, loss ho raha hai,
Yeah,
loss ho raha hai, loss ho raha hai. And you're just looking at this way and just with your foot in God, bachalo bhagwan, that type of
The
thing.
second half of the day was something like that. First half was like, nothing. It will like 25,000 is support, 24,700 is support, 500 is support. You were just thinking it's support, it will bounce, support, it will bounce. After you see that coming close, you're like, oh, please go up.
So at times you also in the market remember Bhagwan Bachalo.
Like now I don't want to rely a lot on God
No,
because God won't save us all the time.
and it's not relying. I don't want to trouble God.
Yeah, I don't want to trouble God because God won't be there to save us all the time in market at least. He will save you in life, but not in market.
Because in market we make a foolish mistakes.
Yeah.
Why God? We should trouble God to save
Yeah.
us.
So now max maybe 1.5% loss. Beyond that, I don't let it go. My profits also don't go very high, so they are also.
So what I would say,
Uh-huh.
those who have joined recently in the market, since it's 4 decades, I have seen almost 6 to 7. To tell me, either UC or LC, upper circuits or lower circuits.
Mhm.
So I have seen that,
Mhm.
and you have seen only one lower circuit.
Correct.
Many
No
people,
upper circuit.
no upper circuit. I saw upper circuit in 2009.
Uh-huh.
That time was also
Mhm.
elections,
Mhm.
and there was upper circuit. Third upper circuit, में everyone who were in short position, there were मतलब 3 upper circuits.
10, 15, 20.
It was third day.
Oh, third day. Okay.
Huh.
Okay.
Where people started cutting their positions.
Okay.
Short were cut, squared off.
Uh-huh.
In 2009,
Hmm.
Nifty went below 2,200 something. It was there. Then in May it was somewhere around 3,000 or something.
Hmm.
It went to 4,500 something.
Okay.
Just in a matter of a week.
Uh-huh.
So that was the very bad situation. It was upper circuits. Otherwise, I've seen lower circuits in 1992, 2001, 2006, 2008,
8.
then 2020 also. All these I've seen. So I know how market behaves at that time and how the panic comes. That panic is very, very difficult to handle.
Correct.
So there are many viewers who have not yet seen such crashes. And what happens after that crash?
Mm-hmm.
Sometimes it's a V-shaped recovery, which happened in 2020, but regularly it's not a V-shape. It may go in sideways consolidation and then recover, or sometimes it may have a V-shaped recovery for 50% and then again back it is falling and all that stuff. So it's very difficult to handle, and that panic situation, whatever we tell people, they're not ready to listen. Either they are full of panic in full bloom, they will not listen to us. Full panic mode, they will not listen to us.
I think this is where the difference comes in with your experience and our so you have a lot of stories to offer, like more than anything. Like if we go dig deeper in the kind of stories which you can give during these times, will be something interesting in itself to hear.
Anytime, you're most welcome.
Sure, ma'am. I would also.
But today is my day.
Yeah, I would also love to have a show with you, like where I just want to extract these stories out of you, because maybe traders who are trading from like last let's say 5 years, a decade, 3 years, would have seen some amount of market, right? But not somebody who has seen for 30 years. Like at least you being in this industry, going and trading on the floor, the kind of experience or the stories which you can bring to people will be of another level. It's
I can share my experiences with which people can have some benefit. Definitely,
Sure.
anytime
Sure, ma'am. That
you
would
tell
be
me, and I'm there.
definitely, ma'am. That would be my pleasure as well.
So, friends, it is an endless talk, endless discussion when it comes to options discussions and how to manage the risk and all that. The discussion is so big, but we are always short of time. It looks like we can talk hours and hours and hours to give you the whole feel of every person whom I talk with. But time is also a limitation. But I will definitely try that Saketh comes back, because still I have a lot of questions to ask, and we'll create a second episode. If you want some more questions to be asked of for your choice, you can write it in the comment box. Accordingly, I can note down all the questions and ask Saketh what he has to say, and we should thank him for coming from all over Bangalore to
Absolutely.
Mumbai, and just for this podcast. Just for this podcast, he came from Bangalore to Mumbai, and I'm highly honored that he gave me that chance, that even I could learn something from him. And definitely, you must have also learned many new points from him. So, thank you, Mr. Saketh. We are
No,
looking forward to have a
definitely you don't
second
have to
meeting
thank me,
again.
ma'am. It's my pleasure to come on the show and have an interaction with you. Even I had a great time. So definitely we will try to have one more show where I think everybody would also want to know things from you than me, because you are the like OG, what we call, of the markets. So definitely, ma'am. Thank you so much for having me.
So, friends, you can subscribe to our channel, those who have come for the first time. And how did you like the podcast? Your likes, your views, your comments will help us to improve, as well as bring more intelligent people like Saketh, and give you all the latest knowledge as much as we can. So please put in the comment box with whom should I do the podcast. Your favorite trader. I want traders, only traders, to interview them, and with that we can learn and earn as much as we can. But everyone, whomever I'm speaking, they say discipline, discipline, discipline. Wherever they are adamant, they are finished. So ultimately, this thing has not been changed. 150 years back also it was the same, 50 years back also it was the same, today it's also the same, after 150 years also it will be the same, that people become adamant. So try not to be adamant, control your stop losses, and hold in profits. Risk management, the most important thing. And with that, We take your leave now. Thank you. Namaste.